Hello, fellow traders. 'Tis I, the Rumpled One. I just like to say thank you to all the of you guys who are watching my videos, and especially those of you who write comments and ask questions. Much appreciated. And for those just joining in, remember to subscribe and click the bell down there so you'll know when I post a new video. Okay, here we go. It is Tuesday, February the 19th, the year's 2019. Let's talk trading. How to trade like a pro. Setting expectations like a pro. I got a question yesterday, and I think it was a serious question. The trader asked, is it possible to turn $1,000 into $1 million? And my response was, yes, it is possible, but it's not probable. And then he came back. They wanted to know, I guess, explain the probable part. I say, well, you know, more than likely you could pick up a 1 pound weight, but it's possible that you could pick up a 1,000 pound weight, but it's not probable. I'm not sure how many humans are walking this planet right now who can pick up a 1,000 pound weight. But, you know, the probability of you running into that person is, highly unlikely. So, you have to set your expectations like a pro. I mean, let's just say you've got $1,000 account and you make 1% a day. Well, without compounding, at the end of the year, 1% a day, say 250 trading days a year, right? What happens to your account? You make $10 a day, 1%. Your account grows, but it's nowhere near $1 million. And the thing is, if you made 1% a day, 250 days out of the year, that's a 250% return on the money, and that doesn't include compounding. So, let's think about that. Let's say you do that. What's that, 2,500 bucks? Still not much money, right? And if you were lucky enough to do that, number one, you'd be probably the best trader on the planet based on results, especially if you could replicate that year after year, 1% return per day. But you see, it's not probable. It's possible, it's just not probable. So let's have some real expectations, because what would you have to do to make that $1 million? Well, basically, if you compounded it, you could do it, but it's just not probable. So once again, with money and risk management, if your goal was to make 1% a day, and how much would you be willing to lose per trade? Would it be 1%, a quarter of a percent? I mean, how much are you willing to risk per trade? Dollar-wise, would it be $10, $2? See, it gets into these equations. I mean, are you going to have a really small position size that to make your $10, it's going to have to go 100 pips? Or are you going to have a really tight stop loss because you have a big position size, because maybe you only need 5 or 10 pips to make that $10? But then if it goes against you, you're going to stop out and you're basically going to be spinning your wheels. You're going to be falling behind. So you have to set realistic expectations. So I hope that answers the question to that one trader. And if not, feel free to keep asking. So let's take a look here. The euro yen. Still in the upper wick zone. It's Tuesday. We still have two gaps that haven't filled. Might be possibilities there. And you can see the euro yen poked its nose above the yearly open, but just couldn't hold it. Now, I want you to look at this chart, and I want you to see if you see something here. If you remember, I don't know if I talked about it this year or not, but if you do a search, you'll see some of my turn trade videos. And I want you to notice something about the euro yen. You see here, it put in a bottom, green, and then green follows. It put in a higher low, green, green follows. Put in a higher low, green, green follows. A higher low, green, green follows. A lower low, green and a green follows. A low, green and a green follows. So you see you've got that turn and then you've got the continuation. I mean, it's a very simple thing. And let's see, if we go down, where is it? I've got so many charts here. I wish they would allow you to label these so you know you could find what chart you wanted. Okay, you guys seen the price action chart. Well, let's go down to the 1 minute. And let's see how many times. You see, you got a low, green, green follows. You got a low, green, green follows. You got a low, green, green follows. Or you get a semaphore there. Okay. Semaphore, green, green follows. Semaphore, green, green didn't follow. Semaphore, green, green didn't follow. So, and then on the top, red, red follows, red, red follows, red, red follows. It's just something that you can look for in your trading to help you with timing your entries and choosing a direction. Because once again, I mean, what is trading? Trading is basically playing a direction game. You're choosing which direction you believe price is going to go next. That's what it is in a nutshell. So all this that we do, we're just trying to figure out, trying to determine what direction price is going to go. That's all trading is. And so if you know that, you know that there's some element of chance in it, you don't have to really worry so much because you enter the trade, and then you place your stop loss, and the trade either moves your way or it doesn't. There's really nothing to worry about. And so when you're looking for methods, looking for system, testing things, all you're trying to do is see if you've got some little statistical edge that says if this happens, then that will happen. And, maybe it happens 2 out of 3 times or 7 out of 10 times. That's what you're looking for. If you can find something 60% or better and you manage the downside with the risk and money management, you've got a winner over time. Sure, there'll be times when, the market just is going against you. But, I think it was Nate Silver who, basically dispelled the myth of hot streaks when he says, it's just part of the normal distribution. Meaning, you're going to have those slumps and you're going to have streaks, and then you're going to be somewhere in the middle most of the time. But the middle's determined by those streaks and those slumps too. So that's just it. You just have to just plow ahead. And so when you're looking at charts, do you have a method that you follow step by step? Or do you just use discretion based on what you see at the time? I mean, right here, I'm not sure why this computer's doing right there. You see this? See, there was the holo right there. I can see it with my own eyes. I don't even need to go to the holo screen. And then you see right here, price just barely touched it and reversed. And then you see here, price came back down through that wick. Great time to short. Not to mention, what's this? Oh, that was the yearly open. And price hasn't held above it too much. That's just one of those observations. And then I think I also talked about the return trade. Anytime you see a big long candle, how price has a tendency to return. So you got a big long candle here, big long candle here. Price has a tendency to return to the open of those big long candles. See this big long candle here? Price just might return. And there's another big long candle there. Price just may return. So when you see things like that, you can maybe take advantage of them. But the thing is, it's a direction game, right? And so all we're going to do is see if we pick right. And you can see here, once again, we're above the monthly open, but below the yearly open. Still within the range of the first day of the month and first day of the year. And once again, we started here yesterday when the price opened. It broke out a nice run to the upside. Once again, just simple. Going with the D1 candle color at the line. I mean, I know somebody's was asking me about all these different screens. I'm just showing you different methods, but when I trade, I pretty much trade off of one screen. But when I'm doing the analysis, when I'm looking around for opportunities, I can see these things. But like I pointed out the other one, I don't even need the lines. I know what to look for, especially on an hourly or daily chart. Hey, here's yesterday's high. It's kind of a no-brainer. Go long. Price has to range. And speaking of range, we've got 1, 2, 3, 4, 5, 6, 7 over 100. Euro yen clocking in at 70. And you see here we put in a weekly H1 highest open right there. You see the touch. Great opportunity to short. Okay, we had the pivot below the buy zone, so really no bias, but the pivot was hit. We're in the upper rat zone right now. So you can see here red rats, green rats. Nice trading for rats today. We took out the pivot, hit the weekly pivot, and bounced. And you can see here we do have that missed pivot at 124.60. 74 pips away. So I'm going to wrap it up with that. Traders, make sure you have realistic expectations. I mean, do you really expect that you're going to take $1,000 account to $1 million? No, it would probably be better if you tried to maybe make 1% a week. Think about it. 1% a week would be a 50% return on the year. It's not what you trade, it's how you trade it. So go out there and drain the banks like a pro.